All right, welcome to the Big Skinny with me, Lou Basenese. Daylight savings be damned, it's getting a little dark here in Brooklyn, but we're going to keep the content here lighthearted, fun, engaging, and ultimately profitable if we do this right. If you're joining us for the first time on the Big Skinny, we do things a little bit differently. We try and cut through the noise and distill down the headlines of the day, week, month, and whatever's going on in the markets to the things you actually have to pay attention to. And we do it in a unique format of one headline you should probably ignore because the consensus is often so misleading. No quibble about that. We then share one key chart that contains the data that leads you to the promised land of hopefully investment riches. And then we show you one investment insight or action to take to actually make this information usable today. Because if we're not making money together, what are we doing here? I mean, hanging out with friends is fun, but it's much more fun if we're increasing our bottom line at the same time. So we do that in our format called the Rundown. After that, we always bring in a market veteran, guest, pro, because we know in these markets especially, you got to be humble or you're going to be humbled. Or as one guest that joins us today taught me, Rick Rule. If you don't know the resource investing name, Rick Rule, you don't know resource investing. But early on in my career, oh gosh, it's over 20 years ago, I listened to him tell people that you're either a contrarian or a victim. So we're going to get into that today. We're also joined by his partner in crime in some really innovative fintech plays and in banking space, but also levered to commodities and precious metals and a lot of other interesting things that you probably can't get from any of your conventional banks, and that's none other than Frank Trotter. If you've ever been to a Jacksonville Jaguars game, you know his work because it was EverBank Field. He's now moving on to Battle Bank. We're going to get into that disruption, his next big act, along with Rick. And, you know, here's the thing. We could be talking about a lot of things in today's market, big AI dominance, but we're going to talk about things that most people probably don't have enough in their portfolio. All along the way, we want to make sure you join the conversation. We are live streaming on multiple platforms, X, LinkedIn, YouTube. Don't be afraid to chime in. Cue up the Pat Benatar. Hit us with your best shot. Alexander Castro from Los Angeles is here. Thank you for announcing yourself, my friend. Lou After Dark. All right. Supervisor Dan. All righty. We got a lot of comments coming in early out of the gate. That always makes for a fun show. It's a little choose your own adventure. So don't be afraid to chime in all along the way. And with that being said, let's go ahead and get to this week's rundown. Nothing like coming out swinging here this week talking about China, rare earth metals, and has President Trump pulled off another coup by solving this critical shortage in the United States? Well, I got news for you, folks. The headlines are saying it. They're asking the same questions. The BBC, of all places. We all know that China controls rare earths, but can Trump's new deals change that? He's made deals with multiple countries to try and secure supplies, refining capacity, not just the actual reserves, because we have plenty here in the United States. We just don't have the means to get them out of the ground and usable. Well, here's the thing. Over 90% of rare earths come from China, right? But here's, if you didn't take any chemistry classes, I took organic chemistry. I was a pre-med major, and in my first job interview at Morgan Stanley, they asked me, believe it or not, what the first element on the periodic table is. It's hydrogen, if you didn't know that. Where are the rare earths? Well, you see them outlined here. I'm not gonna dare try and say them. I don't have a velvety, smooth radio voice to pull such things off, but I want you to be aware that rare earths aren't actually that rare. It's just rare that we have capacity. You see on this chart here from the Financial Times that they're scattered and smattered all throughout the United States. There's just not a lot of actively producing sites, which has created the situation we're in now, right? So here's really what's the key to understand if you've not spent much time thinking about rare earths. It's China's chokehold on the supplies and how much we are reliant on them. I mean, if you go down the list here, these are pretty important rare earths. They do really critical things. Nuclear reactor control rods or in absorbers in nuclear reactors, MRI imaging, so healthcare. It's not just electricity and power generation. Cancer treatment, LED lighting, petroleum refining. You go down the list here, even in big pharma, we have uses for these critical elements that we absolutely need to make sure that we have secured the supply chain. After all, what was this whole trade war about anyway if we didn't dust it up with China? Now, here's the interesting thing. The elected officials and their designation, I don't know, designees, Scott Bessent, Treasury Secretary, is out saying, we're going to go warp speed and we're going to replace all these supplies and our reliance on China in 1 to 2 years. I don't think so. Doesn't happen that fast. It sounds good. A lot of sound bites, but realistically, we're probably 5 to 7 years away from having reliable supplies of rare earths in the United States or through our partners. I got to give Jim Cramer credit for once, because I always dog him all the time here. He's even saying it, right? Look, we got to move faster and play the long game that China's been kicking our butt on in the last 2 to 3 decades. And that's the irony about China. They think in decades and centuries, and we think in terms of elections and midterms. Too nearsighted, not far enough long-term planning. We're trying to correct that. But that brings us to the key point here. Is there enough opportunity here in the United States? Is this an area of the market that we should be investing in? And if you look at the overwhelming data, it says that anyone that's successful in bringing online supplies in the United States, from mined and refined, China is just dropping the mic. They own us, right? This is no different than the U.S. owning China in terms of AI innovation, but they have it to us on the rare earth side. So we have to think about investments. And sure, there's always single stock plays, and they're making noise in the headlines. And the question as new investors, I'm going to take a wild guess and say that most of us don't have any exposure here. We maybe have some gold and silver, maybe got into Bitcoin thinking you were hedging against the unexpected. But I don't recommend single stock plays here. They're too volatile. Instead, the action to take is actually what we always advocate for new trends in the market, and that is to start with some ETF exposure here. So the Van Eck Rare Earths and Strategic Metals ETF is a good place to start. It gives you exposure not just in the US, but Australia, China, throughout Europe as well. And it's a good way to get a toehold position in this sector of the market that is performing very well despite all the crazy headlines, and then begin from there to talk about individual and research individual potential plays. We'll ask our guests if they have any that come to the top of mind. We'll tap them and their expertise. We'll also be joined by a guest later in the show that is actually bringing to market one of the largest tungsten supplies in the United States. But before we get to that, let's make sure that you're paying attention on all the socials. Go to YouTube, follow us there, make us as popular or even infinitesimally as popular as Mr. Beast, and we'll be really happy and satisfied with the progress. If YouTube's not your jam, then go over to X, Twitter. I'm not going to remember last week if you listened in. I refused to call it X until Elon Musk follows me on X. So follow us there and make sure you never miss another episode of The Big Skinny. We've been dishing out big winning stock picks. This morning alone, we got news from Cipher and IREN that delivers huge AI power compute deals with the likes of Microsoft and Amazon. You don't want to miss out on the next big picks like that. So please follow us on socials wherever you like to do that. And with that being said, we're going to take a quick break and then bring in our two guests to toss it up, dust it up with two mentors to me, candidly. I have to confess, these are two gentlemen that I've looked up to for over 20 years, met them early in the business, and really indebted to them for their guidance, their wisdom, even when they didn't know they were providing it. Even better, I got them both to join the show at the same time in the same place. I think I've hit peak Lou Basenese popularity. So I'm very happy and fortunate that we can share this conversation with you. And we'll be right back after a quick break.
We're going to take a look at Nvidia. It crossed $5 trillion worth of value. That was in pre-market trading. Lou Basenese joins me this morning. Do you think Nvidia's future profits justify a $5 trillion valuation?
I absolutely do think that this is the biggest trend that we've seen in the tech sector in the history of the world. And the funny thing is, everyone out there right now and for months has been predicting an AI bubble, and yet here we are having the first $5 trillion market cap company. And it's not Apple, which I thought it would have been.
And it's not a bubble.
It's absolutely not a bubble. Here's the earnings backing it, right? We're getting it the last 2 quarters where Mag 7 stocks, mostly driven by AI, had earnings growth in the 25 to 27% range. Expectations this quarter are for around 14% growth. I bet you they come in north of 20% again. That's driving this boom. It's a difference between the dot-com days when Cisco's price ran up enormously, but they did not have the earnings underneath it to underpin them.
If AI is doing well and keeping pace, we've got a really good year-end rally.
We have a great year-end rally and a great 2026. I mean, it's driving the entire economy, 40% of GDP
growth. It seems too good to be true, doesn't it? I mean, we've been sitting here for 12, 15 years with the bull market.
Look, the psychology is what interests me because I'm a contrarian by trade. The fact that so many people are worried this is a bubble gives me confidence because there's no prize for predicting the top. There's no prize for pessimism. Peter Lynch said it famously, more people have missed out and lost money trying to predict a correction than those that have stayed invested. And I think, look, the key for me is always earnings. That's the sign of a strong business. As long as they keep growing double digits, this rally keeps going.
Welcome back to the Big Skinny, where we're not going to whisper anything. We're going to scream it loud from the rooftops on what you should be investing in, especially when it comes to the natural resources sector. And without further ado, I'd love to welcome our first two guests, Rick Rule of Rule Investment Media and Frank Trotter, CEO of the newly formed EverBank. Gentlemen, thank you for joining me today.
Thank you.
Yeah, listen, I don't know what I owe this pleasure that you're joining me at the same time. I don't think I could pull this off again, so I'm just going to jump right into it. If you guys need to duke it out, the fight over who's going to answer, go for it. It'll be entertainment. You know, Rick, you taught me early on you're a contrarian or a victim, which means you love to invest in things that other people hate. And right now, everyone hates oil and gas. Why should we fall in love with it?
Well, first of all, because people hate it. You know, Warren Buffett says, buy straw hats in winter. Well, this is winter for the oil and gas business. Despite the public perception, oil and gas business is generating record free cash flow. They're making a mistake, in my opinion, in the sense that many companies are deferring their sustaining capital investments and returning that capital to shareholders. The shareholders like that. But on a global basis, we're deferring $2 billion in sustaining capital investments every single day.
Yeah.
This might not impact output in 2026, but by the end of 2027, 2028, this really impacts output, which means the prices are higher. Companies
yeah, so
that are
you think we're going to feel the impact within, you know, by end of 2026 and into 2027? You think that's
I think
that's
end
the
of
horizon?
2027 into 2028.
Okay.
Markets will anticipate this. You've seen Exxon talk about 15% sequential declines. That's arithmetic. It's not narrative. When it begins to occur, you're going to see prices tighten up. You're seeing companies now that are selling at spectacular discounts to net present value, with net present value calculated at $60 oil.
Yeah.
Exxon, as an example, I believe is selling at a 40% discount to my NPV calculation. And I think the NPV of Exxon doubles or triples in the 3 to 4 year time frame. Buying an NPV double at a 40% discount on the biggest and best oil company in the world with a 3.5% dividend, my idea of a good time.
I don't know if I'm hanging out with you tonight, if that's your idea of a good time. It's an idea of a great investment for sure. I'm still a little bit younger. But Frank, let me get your perspective too, because you've been a veteran of the markets and the industry, all commodities. I mean, how do you see it? Because I sit back and look at, well, I agree with Rick. It's arithmetic. It's not a narrative here. What's it going to take for people to wake up to this opportunity?
I think, tightness in any of the markets is the key. I certainly listened to Rick here, who's the expert on this. But if you look at the capital investment in all the sustaining industries that make things move, it's not large enough. There's not enough coming out of the ground. There's not enough being put into play. And that, that prices are kind of an interesting thing. When there's not enough of something, prices tend to go up. And particularly in carbon-based items, which are going to be sustaining our power, our energy for the foreseeable future. That's just got to happen. And
do you think? I mean, Rick, you said before I said that I got old. That means, and you said if I was old, then you were dead because you're a little bit older than me. Relative to all the cycles, boom and bust you've seen in the oil space, where does this rank? What you think's coming here? This crisis? Do you think it's one of the unique opportunities to buy at an extreme discount? I mean, the S&P 500 energy weighting in the S&P is 2.8%, which is well below the 5.5% average.
Is that the oil and gas business is basically such a good business. The idea that you can buy a very high quality business at a substantial discount when the upside is inevitable. A lot of times, Lou, when you were younger, I talked to you about speculative investments where the answer to the unanswered questions began with if.
Yes.
In this particular circumstance, we're asking ourselves an unanswered question. where the answer begins with when. The idea that you can buy a business of the caliber that you can buy today at a discount to net present value today, when the upside is inevitable, maybe not imminent, but inevitable, is spectacular.
Yeah,
The gold trade. The gold
I agree.
trade.
It took me 20 years of listening to finally get into the oil and gas industry, and then it was an immediate epiphany, like, oh, this is how you can secure great financing terms, because you actually have cash flows and real assets that are income producing. So, I mean, you mentioned it earlier. This is the most profitable cash flowing sector of the market. Exxon is a great way to play it. Are there any other kind of subsectors or areas of the market you think become really compelling in this stage of the cycle?
I'm taking the political risk to buy some of the better Canadians. I say political risk because the political leadership in Canada doesn't like their best business, oil and gas, but they do like to spend money. And if you assume that the best source of money that Canada has is the oil and gas business, perhaps they overcome their distaste for making money in the hopes of buying votes. If that's true, then the whole Canadian oil and gas sector, which has more proved undeveloped locations than the American sector and is selling at a discount, generates huge utility. As you know, Lou, I used to specialize in the sub-billion-dollar market cap space. I don't need to. The biggest and the best companies in the space are selling at substantial discounts to NAV that have to rise.
Yeah.
So there will come a time when I talk to you about sub-2 billion, sub-$1 billion market cap space, but I don't need to go there today.
Yeah, it's interesting. It's an interesting setup, right? Because everyone now is bemoaning the fact that the Mag 7 are trading at such steep valuations. You got to start looking in the small cap, mid cap space, biotech, even micro cap. Here in the oil and gas sector, you can look at the big boys. I mean, it's as if Nvidia, Apple, Microsoft, Amazon were trading at these discount to net present values, and you could scoop them up. So let me pivot here, because we got to get to the more important things, what's going on at Battle Bank. But I think the good segue there is to get into gold, right? Is the gold rally done? Net outflows from gold and the rolling 4-week average went the opposite direction. I know you guys you're at the New Orleans Investment Conference, which is notorious for, some would say gold bugs, I would say aficionados or collectors. What's your outlook on gold from here?
Lou, the easy money's been made. The move in a commodity from hated to tolerated is the easy money. If you're a commodity investor or speculator, you learn to love hate. You steer towards hate. Gold is no longer hated. But if you look at history, gold has done well when people are concerned about the deterioration of the purchasing power of fiat instruments. And anybody who isn't concerned about the deterioration of the purchasing power of the US dollar isn't paying attention. I believe personally that the US dollar loses 75% of its real purchasing power, absolute purchasing power, over 10 years. The same thing that happened in the decade of the 1970s. If I'm right, then I would suspect that the gold price, the nominal gold price, the US dollar gold price, reflects on the upside the deterioration of the purchasing power of the dollar on the downside. What could cause me to sell gold? Well, a balanced budget.
Yeah.
Sorry,
wait a minute. A balanced budget? That's preposterous. I think I have a better chance of seeing Jesus tomorrow than a balanced budget.
Some sense that we could service $38 trillion in on-balance sheet liabilities. Some sense of a political accord that would reduce $120 trillion in net present value of unfunded entitlement liabilities. If you solve those three problems for me, I would sell my gold. I won't hold my breath, Lou.
I
if you
wouldn't
look
either.
at that, and Lou, if you look at that flow graph that you have up on the screen right now, or maybe you could put it up there, even with that flows going outbound, the price is holding in there. It's not necessarily that this is going to happen in the next 3 weeks or the next 2 months, but over the period of time, we're not seeing any political will to change how government funds itself, or in this case, doesn't fund itself, or any unfunded liabilities. It just keeps growing. And the old saw, of course, is your gold price isn't going up, your dollar price is going down. And so gold kind of holds its value. I did go out on Seville tailors the other day to see what a suit would cost off the rack. Not one where they're going to custom make it for 10 or 20 grand. Guess what? It's $4 grand. And the old saw again is the gold. 1 ounce of gold buys a fine men's suit. And There it is. It's right
I don't know.
back where it
I'm
should.
going to have to go get some more fine suits than that, man. Wow, $4,000 for a nice tailored suit. Let's pivot a little bit into, because Frank, you guys were instrumental in launching EverBank, which was the first branchless, fully digital. I mean, before Fintech was a thing, you guys were the pioneers in Fintech. And you provided everyday Main Street Americans with ways to leverage gold through certificates of deposit, foreign currencies. Why don't you talk about that a little bit and what you're doing at BattleBank? Because if I'm incorrect, correct me, you've brought the band back together to disrupt the banking space again with BattleBank.
I think that's exactly right. Once we sold EverBank to TIAA, they were nice enough to abandon our target market and de-emphasize their products. They needed to serve their 1.5 million clients, and that's great. What we're coming back in here, we will definitely be dealing in precious metals. You can buy, sell, deliver, store precious metals at BattleBank. Interestingly, you can borrow against them. We did not do that at EverBank. And what this really is kind of like a home equity line of credit, except it's a metals equity line of credit. Your friend Jason calls it a MELOC instead of a HELOC. It gives you 5 years. You can borrow against it. You can pay it down. You can borrow against it, pay it down. It kind of looks like a margin loan at a broker-dealer. We'll also be offering those foreign currencies deposits, either in money markets or certificates of deposit, and some principal protected. You wrote about a few of those back in your days at Agora.
Yeah, no, I mean, look, I think the principal protected product is one that's still unique, right? I mean, I think about the old structured ones out of the bulge bracket banks where we're just a ripoff on fees. You guys are very adamant, lower fees, higher yields returned to investors. Talk about your depositors first mentality.
Our deposit, that central checking account, which is a high yield cash account, this is one account. It's a savings account. It's a checking account. You can do anything and everything with it. And people are saving cash there. They're buying precious metals. They're diversifying into foreign currencies. And we're also offering retirement accounts that are really your retirement accounts. You go to, any of the financial supermarkets, you can buy mutual funds, stocks, and bonds, and that's great. Maybe you should do that. But there are a lot of other things that are legal in a retirement account: multifamily housing, crypto, hard money loans, private equity. And a lot of those other, if you go to Schwab and say, hey, I'd like to own a 4-flat down the block, they're going to say, no way. Same thing with Fidelity, same thing with Vanguard. And it's really giving people an option to do what they want to do with their own money. Kind of an odd concept, I know, but this is where we philosophically like to be. Yeah, and what we really are is a community bank that is for a community, not defined by geography. We sort of laughed and said, normally you open a bank, you draw a circle around a branch, and you serve that circle. But we had to draw a rectangle to get in all of North America. And that's what we're going to be serving. That's our community, which is nationwide and Canada, and people who are philosophically aligned with how we look at things as opposed to geographically aligned with where our location is.
Yeah, no, I love it. Innovative again, even when you guys don't have to be. Rick, so talk to me about what are next steps, because I know there was a little bit of regulatory issues getting the bank off the ground, but we're past that hurdle. I came out of the FINRA world just before I got into oil and gas, so I know the wonderful slow pace of the bureaucratic regulatory machine.
Let's not cry over spilled milk. The truth is, it was longer an organization than it should have been. So we bought a bank. We short-circuited the regulatory problem by buying a bank. We asked the regulators for permission to add capital to the bank, and they kindly acquiesced to that. Now we're shaking in those systems with our own money. You only get one chance to make a good impression. So we're shaking in the systems with our own money. I suspect that we'll be open to at least to our waiting list in January. Yeah. It was really fun. Last Monday we had a board meeting, and I noticed halfway through the board meeting we were actually talking about banking. We were talking about making loans. We were talking about duration risk, as opposed to talking about how do we finally get licensed to a bank.
Yeah, we've been a software company for about 3.5 years, and that's great. But all of a sudden, we're back to having a few committees, putting bonds in the market, looking at loans. We'll be booking our first metals loan this week.
That's awesome.
And then opening up, hopefully, to shareholders later this fall and to the real world in January or early February.
Lou, the point of this software is to serve customers. So we're to the point now where the systems are intact. We're trying the systems out on ourselves. And then we look forward to deploying what has now been 4 years in gestation.
That is patience, but rewards coming. I want to encourage people to check out. We're going to put the QR code on the screen so you can get more information about BattleBank. Encourage everyone to do that. Just, you guys have a history of releasing innovative products and taking care of your customers. Got a question here from Alexander Castro, though. If it's a good time to buy oil, how about natural gas, and what could be the position scenario? 2x from here, it trades at about 426. You see 8 and change on natural gas side. Where do you think the sweet spot is for oil as well?
Long term, natural gas looks very nice to me. It has had a real run in the last 2 weeks, and it wouldn't surprise me to see natural gas need a little bit of a rest. I own 2 Canadian natural gas stocks. I own Birchcliff and I own Peyto, both of which have a long way to run. I own 2 big U.S. gas stocks, Devon and Equitable. Understand, I'm in this game for at least 5 years. Speculators in the natural gas side might want to step aside a little bit and let the market digest a 25% gain, 20% gain. As you know, Lou, I'm not really a speculator.
No.
Longer term, the gas is selling at a good discount to oil on a BTU equivalent basis, and I think over time, that declines. That discount declines.
What are your thoughts on oil? I mean, because I look at the available inventory in the Permian for new wells to drill, and if we drop below $50 a barrel, we get into a really low number of inventory years left. I mean, do you see, Goldman's out saying low 60s at the end of 2026? I say that's not possible for long term. I mean, you think we got to be north of 70 to kind of hit to equilibrium where it's economical to keep drilling?
Lou, I think it's about technology myself. It's partly about cost of capital. If the interest rate goes up, the cost of capital goes up, their drilling goes down. If the equity cost of capital stays high, their drilling goes down. But really what's happened is that we've drilled a lot of our tier 1 inventory. There's a few guys with tier 1 inventory left. Occidental's got tier 1 inventory left. Exxon's got tier 1 inventory left. But at today's prices with today's inventory, we've got less and less. If technology develops to the way that technology developed 15 or 20 years ago, then we skate back on side. But that involves new technology, which we do not have yet.
Yeah, no, I'd concur with that assessment. Working with an A&P player in the DJ Basin, where the newest thing is doing U-turn wells. We did a few of those where we're going out a mile and coming back a mile, but there's no new tech that's going to boost the level that we're getting out of the reserves from each well. So, gentlemen, any parting thoughts? What's a parting thought you have? Go ahead.
Well, simply, I was talking about laterals. Exxon, after they bought Pioneer and they consolidated land position, they have 4-mile laterals happening now.
It's crazy.
The new technology is going to have to be around recovery. We're going to have to figure out how to get more oil and gas behind pipe into the pipe.
Yep.
There's a lot of guys working on it, but nobody is doing it. That doesn't matter for investors. What investors need to know is when the big thinkers say that the half-life of oil demand is to 2030, that's wrong. It doesn't occur in my lifetime. By the way, I'm a healthy 72. Lou, it doesn't occur in your lifetime.
Yeah, I'm not 50 yet, but I'm damn close now, Rick. Don't hold it against me. I think you met me, I was half the age, so.
You got a newborn, Lou, so maybe.
Yeah, well, that also shows I'm a speculator and not maybe the brightest guy, right? Starting over, making sure that I got to work really long. So you guys are at the New Orleans Investment Conference. What's one key thought, takeaway, sentiment there that surprised you after a day of speaking with attendees?
Go ahead.
I wouldn't describe it as surprising. But I have to say that it's easier to talk about gold paradoxically at $4,000 than it was at $2,000. Gold is, one could say precisely half as attractive, being doubled in price, and the interest is 4 times as high. Such is life. Yeah. Mercifully, both Frank and I were able to stand on the podium and talk to people who were here 2 or 3 years ago and say, "I told you so."
It's a good
"I
feeling.
told you so" is a very good lead-in point to a conversation. So interest in BattleBank has been extraordinary, and interest in oil and gas, which otherwise would have been low, was high because we put it in the context of buying uranium 6 years ago or oil 2 years ago.
Yeah. Well, listen, I appreciate the both of you spending some time with us in the midst of a busy schedule. I encourage everyone to check out what you're doing at BattleBank and look forward to all that's to come in the future. And the next time that we're together, I hear we might end up in Nicaragua at the same time. So watch out. We might have to do an episode.
I think we'll be there with you, and it's going to be a lot of fun.
Yeah, looking forward to it. Well, gentlemen, thank you again. I know your battery's about to run out, so just in the nick of time, thanks for joining us once again on The Big Skinny.
Thank you so much, Lou.
All right, folks, I could sit there and talk with those two gentlemen. We just started to scratch the surface. They've seen more deals, passed on more deals than ones that I've even invested in. Just a wealth of knowledge and market wisdom there, and just always have been humble and welcoming and accommodating like that ever since the day I met them over 20 years ago. But listen, Elon Musk might not be the same way, maybe a bit more abrasive, but I'd be so complimentary of him if he followed me, and I'd be even more complimentary of you if you followed us on X to make sure you don't miss out on another insight or episode of The Big Skinny. So don't waste any time while we take a quick break, show a recent clip from one of my market appearances. Before we bring in our next guest and get to the next segment of the show, go ahead. Go on the X. Could do it. You can do it right now. I can wait for you. Just push the button. All you got to do, follow. Trying to get to 10,000 before my big birthday next week on November 10th. So help us get there for a cause. We'll be right back after this quick break.
Coming to you with two out of the block here. Two questions off the jump here. One, on this Amazon layoff news, what's the economic read-through in your mind?
I think it's an improvement of margin, but nothing to worry about as a recession. If we rewind to 2022, 2023, you saw massive tech layoffs. I think we had 150,000 layoffs in 2022 alone, and that included 18,000 from Amazon. Tech, in my mind, is notoriously bad at right-sizing employee counts. And I don't want to diminish the impact to actual humans losing their jobs. But if we look at X, for example, when Elon Musk took it over, he cut over 50% of the workforce, and it's still operational. You're talking about Chegg cutting 45%. So I think this is just the normal course of finding the new equilibrium in tech. Amazon especially has to do that because they're ramping up robotic workers, automation. But at the same time, they have the lowest margin out of the Mag 7 at about 10% net margin versus an average of 25% for the rest of the Mag 7.
Okay.
So necessary move to restructure.
Welcome back to The Big Skinny with me, Lou Basenese, still here, still plugging away at this. And I'm excited to bring on a new friend that I met at the LD Micro conference that just happens to be one of the problem solvers in this space at the top of the show that we're talking about, rare earth metals. So without further ado, Brodie Sutherland, welcome to the show, my friend.
Yeah, thanks, Lou. Thanks for having us on.
Yeah, absolutely. Listen, we talked about it at the outset of the show, the fact that basically China controls all the supplies and the refining of rare earths. But lo and behold, you've been in this industry for a while and you've got plans to the otherwise. So why don't you tell everyone about Patriot Critical Minerals and what you guys are up to?
Yeah, exactly. We look to basically fill in the gap and replace Chinese supply of critical metals to the United States. Right now, 83% of tungsten comes from China. However, in February, they banned all export of it. And since that time, the price of tungsten has nearly tripled. And that's really where we come in to offset that gap. We have control of the largest tungsten deposit in the United States.
So where did you get, I mean, you say that at face value and it's, wait a minute, I would read the headlines as an average American go, I thought we didn't have any here. How did you guys come about the largest tungsten deposit? And can you put it in perspective how big it is?
Yeah, great question. So we do have tungsten here. We've just for the last 2-3 decades have forgotten how to develop mines. That hasn't been a priority for us. And that's changing right now. We're seeing that with all the initiatives with the government. We're seeing that with full support on permitting, grants that are available out there. They want to catch up to the Chinese. And this is an all-out battle to offset that supply that traditionally came from them. And this deposit, it's right up there with some of the biggest in the world. If this were to come online, this would be basically second out there in terms of annual production potential outside of China. And that's a huge thing. We need all these tungsten deposits to come online to help battle against the Chinese.
Yeah, so let's get into more specifics for people that are completely unfamiliar, and that includes present company included. What are the major uses of tungsten, and why are they so critical, right? What are the applications that people it'll really drive home the point on why this is such an important resource to develop?
10% is military applications, and that is the most important piece. If you want to have stable, secure military, you need tungsten. Tungsten is used in alloys. It is nearly as hard as diamond. It's as dense as gold. It has the highest melting temperature of any metal. These are all characteristics that make it ideal for ammunition and strengthening steel. 80% of the market is industrial. So anything that's metal that's been manufactured has been, basically interacted with tungsten carbide by being cut by it. So and we're seeing ever expanding uses for it: semiconductors, solar, nuclear. The list goes on. So we need this metal. It's listed number 9 of importance in the U.S., and that's why we're driving this project forward.
Yeah, so let's talk about this project. How in the world did you get the largest tungsten deposit in the United States? You must have been contrarian, very much so. And what's your background? And then bring us up to speed on the opportunity that exists right now, because you guys are a privately traded company that you're going to be coming public before too long.
Yeah, exactly. It all comes down to timing in this space. And, we have a group that's had decades of experience in the mining sector. We knew that tungsten was going to be moving here. We've got control of an antimony-focused company. We saw how the price of that commodity really took off over the last 2 years. We started actively looking at tungsten assets. We secured this one basically the same time the Chinese banned export. So if we had waited any longer, we'd be talking about a very different terms on that deal.
You got any winning lottery numbers for next week's Powerball that you want to share with us, please?
Hey, well, you know me, Lou. We had the triplets here at home, so there's something going on in the water here. But no, it all comes down to timing. So we're very fortunate to be moving forward with it. And again, what we're seeing from the U.S. government in terms of support on different levels is unprecedented. We haven't seen this level of support probably since World War II on mining focused projects. And it's an incredible time to be moving.
And that's been the key bottleneck historically, right? Permitting, government regulations, flat out stonewalling on any new developments. Has that been just all of a sudden changed under the new administration, or just as this trade war really heated up and everyone realized how critical it was?
It's the trade war. This has been heating up for a while now. I think the past administration had done some legwork to get things rolling. The current administration has really kind of set that alight, and we're seeing all these move forward. There's this Fast 41 initiative that helps accelerate the permitting process, and we've calculated this is going to basically save us 5 years of time that typically would have taken to develop. So that's massive when you're looking at these types of projects. But the reality is we're decades behind the Chinese, and we need to do everything we can to catch up. That's starting to happen, but we got to look long term.
So talk to me quickly before we let you go and before we have you back on, just the opportunity in front of investors right now. I know that you're doing a deal to accredited investors, $10,000 minimum to be part of this. It's a $30 million raise. And then shortly thereafter, you will be going public. So maybe sometime in Q1. So talk to just the mechanics of the deal and why you think it's such an attractive opportunity.
Yeah, the way we're pricing the deal right now, there's a market comparable out there that's trading at a $240 million market cap with a similar asset, smaller in Nevada. So we think, basically we're providing a discount to that. It's one of the cheapest entry points you'll find in the tungsten space pre-IPO. And I think that's a huge opportunity for investors there. And yeah, we've got a team that's really driving this forward. So as we advance through IPO beyond, we've got a real strategy here to aggressively advance the asset. You can go to patriotcritical.com to learn more about it and reach out to us. We're happy to communicate and you can be part of the story as we advance this forward.
Well, listen, Brodie, I appreciate you coming on in the last minute to start getting us up to speed on what you're doing and building. Would love to have you come back on as you get further down the road.
Absolutely. Thank you, Luke. Appreciate it.
Awesome. Listen, folks, I encourage you to go check out the website we just put on the screen here, because it's rare that you get an opportunity to invest in a pre-IPO company that's going to so quickly go public. I would tell you from my experience, 20 plus years, and in the last 5 years where equity crowdfunding has come up, a lot of times you make pre-IPO investments and they stay private for 5, 7, 10 years, even indefinitely. So again, a unique opportunity here and brought to you. That's what we like to do, is bring you things you haven't seen necessarily. Go to check out, invest at patriotcriticalmineral.com. Thank you again, Brodie, and we'll be right back after a brief break.
Lou, two things we haven't touched on at the desk yet. TikTok as a potential deal. That is something that Beijing seemingly is throwing us, because that's what the president wanted. And also his fight on fentanyl. Yeah.
Listen, fentanyl is deeply personal to me. I lost a brother and a cousin to fentanyl overdoses, so I think this is a huge, huge position to stake claim to end it, right? We're shipping it to Mexico, then Mexico across the border, right? TikTok, I think TikTok's going to linger. I don't know that this comes together on this deal, because you're trying to fight over equity ownership of an algorithm, that there's too much at stake there. I think the trade deal is more important. Rare earths, back to Brian and Griff's point here, timing every minute matters. I met with the CEO of the largest tungsten deposit in Nevada last week. They're raising funds to come public, and they're not going to be online with that tungsten deposit until best case scenario 2028. So 1 year delay does not provide us all the wiggle room that we need to actually be independent. But I said, every minute matters, and I think the president's making the right steps. Secure supply from other countries, show China we don't need you, and step into that, right? So I think the market's here. It's always a freak out Friday. There's a very definitive script here. Freak out on Friday, things are falling apart, and then by Monday there's a miracle and it's coming back together. And I think investors are getting trained to expect this, right? So we know there's deadlines, they're going to get met.
Welcome back to the Big Skinny. Oh, look at this man here. Coming in nice and snug right here. Oh, I got to go the other way. Oh, it's good to see you, friend. Yeah, you see, you got the wrong way. Walk Like an Egyptian. You remember that song, buddy? That was from our day.
Of course.
Yeah.
It's great.
I know, great song. What do you yeah, we're getting what's from the youngins in the studio that don't have a clue what we're talking about. They don't know Weird Al Yankovic. They don't know most of the things. Jerky Boys. Come on, man. Come on. So much culture just missed out on. I did have a conversation recently, Dodd, that, you know, basically the music we grew up with is considered classic rock now because it's 25 years old.
And it's the best music going. A lot
but it's
better
not
than
rock,
crap that's
though,
on
dude. It's
today.
like alternative and grunge. Yeah. That's not classic rock, but I digress. We're introducing some new stuff here this week, aren't we?
I know, new segment. Look at us.
What are we calling it?
We're calling it Headlines and Head Scratchers.
Yeah, what's this about? You just came up with this, man. I'm going to let you run with it.
You know, this is
that
just
was a nervous laugh, my friend. That was a nervous laugh.
What, my nervous laugh? Put me on the spot. You love to do that. It's all good. Yeah, headlines and head scratchers. You know, it's just things that are in the lines that we should talk about, you know, our viewers should know about, and things that just maybe don't make a lot of sense. But, you know, it's this world we're in. It's a reality. So we're you know, pointing those things out.
It is, man. We're trying to highlight. Some people have called us the Sports Center of Financial News, so we're just trying to get to the highlights of the things that matter, not the boring. Oh, Violator 2020 is back again. All right,
Susanna
all right.
Hoffs, walk
Yes.
like an Egyptian, right
Yes.
there. There you go. Violator 2020, showing their age.
That's right.
They're in our club.
I believe this is Violet, who I met at the Penny Boys conference, and just a wonderful woman. So thank you for always being such a constant supporter of all that we're doing here. If I'm wrong and it's not you, you're probably still. Thank you. Please accept my thanks for always being here. But
Is Susanna Hoffs the legends, or are we the legends? Is she calling us legends? I'm gonna think that she's calling us legends. That's
let's go with legends. That is us. All right. Yeah. All right. Let's get to the headlines and head scratchers for this week. Starting us off with
bigger tech. Let's do it.
All right, bigger tech. I mean, all in the headlines talking about how big AI spending is going to be, and yet it just keeps getting bigger and bigger. Business Insider with this headline: the spree just keeps getting bigger. Guess what, folks? Newsflash, it's going to keep getting bigger. You've seen quarter in, quarter out, the likes of Meta, Amazon, Alphabet, all of them. You pick, Oracle, it doesn't matter. You have CEOs coming on saying that there's just too much demand. They have chips and not enough power to plug in. This AI trend is in the early days of this boom. What say you? I mean, you're an outsider. What do you like from Wall Street? I look at it and go like, I've never seen anything like this. Have you ever seen a trend like this played up this much in the media?
Not at all. Not everything I'm watching. I mean, it's insane, and it happens daily. You know, whether it's an email inbox, you know, from different outlets, or just social media, you know, talking about it. It is a frenzy right now but it's real. This AI energy and everything that's going on. I mean, I know, next week we're going to be getting into that a little bit, right?
Yeah, next week we're going to be talking big tech earnings with my big tech bros, Daniel Newman, CEO of the Futurum Group, and Shai Balor, the chief market strategist of Futurum Equities. And look, these two guys have an inside track on the most compelling insights from the big tech companies as they're doing the research, but also doing the consulting with all the big names in the place in the space. So there's no better source of real information. We're going to dispel all the bubble talk. We're going to talk about the highlights, lowlights. There aren't many lowlights of them. It's nothing but escargot problems here in the big tech space because it's all fine wine and dining based on the latest results. So we're going to get into it with them. So make sure you tune in next week, not just because it's my birthday, because I got to confess.
I was going to say, big tech is happening next week, but something bigger is happening, isn't it?
Yeah. It's not my 50th.
Aren't you turning 21 next week?
Yeah, 21 again, times 2 and plus 6. Yeah, we're almost getting there. But no, folks, tune in because it's sure to be fun because someone on the screen has got all these surprises planned. As long as it's not crypto or crap, we're all good.
All right, revenue matters. Moving along.
Yeah, revenue does matter. Here's the biggest thing that people are trying to point out about the AI bubble, saying it is a bubble, is that they're just worried. If you look at past bubbles that were legit bubbles, the EV boom, right? You had 9 companies that basically went bankrupt on the fact that they just couldn't generate enough revenue. You had 200+ billion in market cap and only, I don't know, 25 billion in revenue, maybe total. That's not sustaining. What we're seeing in AI right now is a flood of revenue and a flood of prices. I mean, a rise in prices. So it's getting backfilled. The earnings are going to be forthcoming. So this is not a bubble, just another demonstration of it by looking at what is a bubble to compare it with what the current conditions are. So people don't get scared out of these markets prematurely.
So no bubble. It's just keep growing, right?
Listen, when I stop getting as enthusiastic and when I stop hearing all the bubble talk, then it should be time to be worried because that means that things have gotten out of hand, valuations have gone too high, earnings growth haven't backfilled against it. I mean, but we're not getting any of those warning signs just yet. One of the things that came up this week that I thought was super interesting, the comparison between .com and AI. I know you want to call them bubbles, right? Like people want to say this is an AI bubble. During the .com days, during the peak of it, 97% of fiber optics were dark. They weren't being used. That's the infrastructure. You know how much AI data center capacity is dark right now? Zero. Literally, zero.
And there's not enough.
So until that supply-demand imbalance gets closer to equilibrium, I think we got nothing but higher prices and stock moves from here.
That's
Knock
awesome.
on wood.
Yes. Sorry. Big gain therapy.
Yeah, look, we've talked about gain therapeutics before. We've had the CEO, Gene Mack, on the show. They're getting ready to present some new data. And I got to be honest, we haven't provided an update recently on the company, but they are seeing really encouraging data. We're going to get some biomarker data. This is a company that is got a drug that's going to go into phase 2 for the treatment of Parkinson's disease that there is absolutely nothing on the market right now. Michael J. Fox is probably the most well-known celebrity or person with Parkinson's that you can see in real life, the degenerative nature of this disease. Here's the thing. We sat down with CEO Gene Mack as part of our new Upside Executive Access series to give everyday investors access to CEOs and what's going on at their companies. We're going to show a quick clip here and then show you where you can get the full interview, which if you do nothing else today, go do that. Go check it out.
What I think the upside is, our revenue generating potential is in the billions of dollars annually. There should be some multiple.
You can put any multiple on it. It's a lot more than a $70 million market cap.
Any number from where we're sitting right now.
Yeah.
This, we're a $2 stock. This stock's a buy at 10. It's a buy at 15. It's a buy at 20.
You can find out more about Gain Therapeutics by scanning the QR code on your screen or going to the web address there where there's a full 30-minute interview. And again, I like to keep it in layman's terms so everyone can understand what this company is doing. So there's all filling, zero fluff with Gene Mack, the CEO of Gain Therapeutics. I encourage everyone to go check it out when you've got some time. This is a company that I'm personally invested in, plan to be continuing to buy more as this data comes out. As he said, it's a buy at 2, it's a buy at 10, it's a buy at 15. It's pretty bullish comments coming from a CEO.
And I might be a little biased, Lou, but the interview was fantastic. You did obviously a great job, but great
Thanks,
information
it was AI.
in there.
It was AI.
What's that?
It
was all AI. It was AI, Lou. Okay. But with the data, the way it's trending, and the fact that biotech's coming back, it's definitely something that I actually added to my position this morning on.
Look, it could be the perfect storm, but again, full disclaimer, this could be something. Biotech is tricky, right? The data, it all depends on the data, right? You can't make up better data if the data is not good. So when the data comes out, if it's good, I expect this company to have some really good progress in terms of share price and, more importantly, partnership deals. So I think that's all on the horizon, soon to come.
All right. Dodger up. I think we're talking baseball. We're talking baseball here.
Yeah, we're talking baseball. I know you don't play baseball here, but I got to give credit where credit's due. They beat the Yankees last year, and then they won against the Blue Jays this year. It's a trend that's forming, but there's another trend in the market that is even more powerful than the Dodgers back-to-back. It's the back-to-back-to-back to looks like back 10% plus growth rate for S&P 500 earnings growth. And folks, we talk about this all the time. You're going to get sick of it. It's like, drink your Ovaltine and eat your veggies from our parents growing up. But stock prices ultimately follow earnings. And if earnings keep going up double digits, this market's not going to stop anytime soon.
It looks like 5 out of the last 6 actually up 10%. So that's
Eagle eye. You're older than me. How do you see that well? Did you have LASIK recently?
No, I wish. I can't do that. I'm blind as a bat.
Yeah,
they won't even give it to me.
Look at, if you're curious looking at this chart, well, what's the huge boom on the far left? That's coming out of COVID, where the year-over-year comparisons were completely in the favor of no growth. So we had a massive collapse, and then any kind of growth would show a big percentage increase year over year. So that's an anomaly. What's to the far right of what's going on is not an anomaly. It's a sustainable trend that continues to persist. And higher from here, higher for longer is what, not interest rates. We're talking about stock prices.
All right. The next one, spooky. The next one, spooky technicals. This one definitely sparked my interest. What are you talking about here?
A big Halloween or horror movie fan or no?
Not. When I was young, I watched some of them, but not anymore, man. I gave that up just like roller coasters. No reason.
No reason. You just gave up roller coasters. I'm not a big fan of roller coasters, but anyway, look, from time to time in the headlines, you're always seeing these ominous sounding technical indicators, and the Hindenburg omen is one of those that makes a lot of headlines that you should typically ignore. It's not very accurate. It's a bit squishy in terms of what it is calculating. It's looking at the number of new 52-week highs versus the number of new 52-week lows, and it applies another technical indicator over it. It's just too complicated for me. What matters is the results, and the results are not overwhelmingly scary. It's not been accurate, but it did get triggered. So I bring this up only to share with people that it's part our job to give you the truth beneath the headlines. This is not one of the reasons you bail on the market because of some esoteric technical indicator triggered a sell-off warning.
I believe in ghosts and aliens, but this sounds.
We added ghosts
ridiculous
to this now? I thought it was just aliens originally.
Ghosts and aliens, of course. I've got stories, but this sounds like a Simpsons episode. Like when they're predicting, Trump presidency, or Siegfried and Roy tiger attack, which I think we all could have predicted that one, but still a little bit crazy. This is a Casadega trip right here on this one. I don't know. I'm not buying it.
I'm not worried about it. Just moving earnings over omens is what matters. Let's roll with that. So, well, speaking of which, we're rolling into the end of our show here, which usually means we have to thank you for joining. We also have to do a quick check-in to see if I did okay on the super secret game we play each week, where you give me 5 hard words that I need to work in naturally to the conversation. Sometimes it's very unnatural, but pretty sure I did it this time, my friend.
I think you did, man. This time, I think you, once again, you've been perfect every time, haven't you?
I know. It means you just need to send harder words.
That sounds like a challenge.
Here's a challenge. Why don't you, the viewers, consider submitting to us at info@thebigskinny.com 5 really difficult words that have no necessary relation to finance, investing, or the markets that you'd like us to try and weave in. Obviously, keep it PG. We are trying to be respectable here. I mean, I am at least. Crypto or crap was 100% not respectable. But
you really have a problem with crypto or crap. We need to bring that game back.
It's the only thing. No, it's all crap now. After the massive crypto crash, all the altcoins got obliterated. So I could just say it's crap.
I can revive that game somehow. Trust me, brother. I can make it happen. Yeah.
Listen, I know you can, and I'm really afraid of what's coming next week, just as much as I'm as excited about our 2 guests. We're talking the big tech rundown with Daniel Newman and Shai Balor, and big birthday surprises from none other than Dodd, the man himself.
Get excited.
I am. So listen, thank you folks for tuning in wherever you're watching us live, X, LinkedIn, YouTube, or maybe listening to us on Apple or Spotify in the podcast section. We appreciate your attention, loyalty, support. And we'll be right back here next Monday, 5 p.m. Chad Towers, great show.
Here's our guy.
Chad, you haven't multiplied yourself. Go back and do your homework, my friend. You're so loyal, but you're supposed to bring 10 more Chads for next week. Celebrate with us, everyone. With the Infrastructure Insight, are you following suit with Lumen as a buy? I have not. Let me look at it. Your birthday, my birthday wish is to have an answer for you on that next week. So tune in next week, Chad. I'll have an answer for you on LUMN. And tune in, all of you. We'll be back here, same spot, same hour, same Monday. Big Skinny, dishing it up, all filling and zero fluff. I'm Lou Basenese, and you are
Odd.
out of here.
See you next week, brother.
All right.